Hello and welcome. This is Stocks to Watch on BloombergQuint. I am Agam Vakil. This is where we take you through three stocks which are in the news and discuss them with our experts today. We have with us today Avinash Gorakshakar, Director Research of Profit Mart, who's joining us to take us through the stocks. Good morning, Avinash, and thanks for joining in. But before I go across to Avinash, let me talk about the first stock, which is right in the top of the list in the Eicher Motors. We had earnings come through on expected lines. It is a weak quarter considering we have seen a decline of around 12% when it comes to its revenues, profits down 44%. That perhaps was largely in line with expectations because we already have the volumes numbers come in. But the board is also considering a stock split. In fact, it already has. It is awaiting shareholder approval where it will see one share split into 10. And of course, this move is likely to come to fruition in the next 2 to 3 months. But Avinash, let me bring into this conversation. How are you seeing things when it comes to Eicher Motors?
Good morning, Agam. I think numbers from Eicher Motors were on expected lines. I think the weak cycle in commercial vehicles as well as premium bikes, and obviously the effect of the coronavirus and the lockdown all got impacted in the numbers. I think overall the markets are definitely looking forward that obviously from the second half of this financial year, positivity, especially in the two-wheeler market, could come in. Overall, I think apart from the split, which is more like a market-friendly sentimental move, this could possibly give a little more liquidity to the counter because the company has had a very small equity of almost 28 crores for so many years. So this is definitely a big positive. But overall, if you look at the business metrics, I think commercial vehicles could take a little longer considering the fact that liquidity, from the NBFC sector has also got little restricted. But overall, I would believe that, from these levels, the stock could see a little bit of consolidation. And I think one could look forward to a better FY22. FY21, Agam, could be a challenging year, and any revival could be possibly post second half of FY21. So net these numbers were in line with expectations, but overall don't expect any significant re-rating purely because the stock split has happened. This was also anticipated, and finally it has happened. Agam, I can't hear you.
Pardon, I think. Okay, I'm going to very quickly go to Vinati Organics. What we have seen is a decline in revenues as well as profit, but again, this is largely on expected lines. We also know that Vinati Organics provides that certain inputs when it comes to paracetamols and ibuprofen. Of course, that's why it becomes a very important stock. But Avinash, my question to you is that to what extent have we seen, Vinati Organics? Fourth quarter already being factored in, and what's the way forward here?
No, I think Agam, as far as Vinati Organics is concerned, I think numbers were expected to be slightly weak because obviously, incremental momentum has slowed down. I think on the YOY basis as well as on a sequential basis, we have seen top line, showing a marginally negative growth, plus bottom line also going down. But I think the positive part is that hopefully, once the US market recovers, which is a big market for the company's product, especially ATBS, I would believe that momentum would come in. So I think you could see a little bit of sluggishness and a slowdown in the coming quarter, that is June and September. But one positive part about Vinati is that it's a very lowly leveraged company, practically no debt on the books, and operates on reasonably good, attractive EBITDA margins. So I would believe that in the near term the stock could correct, but it could be a good opportunity to accumulate the stock. I think FY22 we could see resumption of growth happening again.
We move on to Mindtree, and we have an update from Mindtree when it comes to COVID-19 impact. Now, this is, of course, a very important mid-size IT company, and there is a suggestion that they expect single-digit decline in overall revenue sequentially in the first quarter of this ongoing financial year. Now, that is not unlike what we have seen for a lot of the other companies in terms of their commentary. But they're also suggesting that the margins will hold for the first quarter, and they're seeing an increase in demand in communications, media, and technology. Again, Avinash, a lot of this perhaps has already been factored in, considering the anticipation of a sequential drop, quarter-on-quarter drop for revenues for a lot of IT companies. Where do you place when it comes to Mindtree as compared to others right now in the sector?
No, I think Agam clearly, it's a fact that at least for the next 1 or 2 quarters, sequential growth is definitely going to be a big challenge for IT companies. And I think if the management has said that they would be holding on to their EBITDA margins, I think that is a definitely a good positive because markets were definitely expecting that incremental order inflows, from US especially, is unlikely to come in at least till September. Whatever improvements could come in is post September. So I would believe that as far as Mindtree is concerned, the stock has already factored in most of the negatives, and this is reflected in the prices. I think investors should at best hold on. Any incremental kind of improvement in numbers post September could obviously give a good buying opportunity. So as of now, I would believe that looking at other comparable companies like say an LTTS or maybe a large player like TCS, I think Mindtree definitely has a reasonable good base to grow. It has a reasonably good order book, but I think near-term re-rating is ruled out. So longer term, I think I would definitely look at the stock, but in the near term, I think investors should hold on. Fresh buying could possibly resume once we get the June numbers and some fresh management commentary going forward.
Um, uh, let's conclude our chat by me asking you about an interesting idea. Last week, you did speak about Vinati Organics. Do you have anything new for us this time?
Agam, I think one interesting stock which could be in the limelight and where the numbers fundamentally continue to be strong is Indian Energy Exchange. In fact, this is one of those companies which enjoy a very low asset kind of model and which has got completely unaffected by the coronavirus. In fact, the interesting part is that now, gas trading futures have started, and this is definitely going to percolate into numbers at least in the next 2 to 3 quarters. So I think this could be an interesting bet for longer term investors, considering that power trading is now picking up, and this is one company which has got a fair amount of dominance on the power trading market, enjoys a market share of almost 98%, and fundamentals continue to be strong. So I think IEX definitely could see a strong upside, and I would not be surprised over the next say 12 to 15 months, one could reasonably expect a 18-20% kind of upside from the current levels.
Okay, Avinash, we leave it at that. Thank you so much for joining us and taking us through your views on the stocks that we discussed today.
Yeah.
Well, and on that note, it's a wrap on this segment, but there's lots more lined up. Stay tuned to BloombergQuint, and we'll keep bringing you more.